We're now going to be focusing on the swing system or the swing strategy. We're looking at the Euro-Yen daily charts, and all we're going to be focusing on is the price action itself. Now, the swing system is, roughly speaking, a one-to-one reward to risk trading system, which means it's not a positive reward to risk trading system. However, it is a very high success rate, and it's very good for building confidence while you're trading. It's a very simple price action setup once you've learnt it, and the target is very simply ATR5. It's a very good complement for the reversal and continuation systems that you've already learnt, because of just the way that it works off of the price action. It tends to win when the reversal system loses. So if we go through and look at this now, we need to understand first of all what's required. And the swing system is designed to be traded in trending markets only. Now, I hear you thinking straight away, well, hang on, that's quite discretionary. Now, we've defined exactly what a swing high and a swing low should be, and also how a swing system setup should be as well. What we're looking for is we're looking for a higher low in an upward trend than a previous high. Now, that's the way that we're actually defining the trend. We're defining it by saying we're looking for a higher low than the previous high. I'm going to mark on some of these highs and lows so we can understand exactly what's going on. We're going to look at a bit more data here, just mark on some of these highs and lows. We'll start off first of all through this sideways market. We can see the swing high at the top up here. We can also see we have a swing high here, and the high point is being confirmed by looking at the 1, 2, 3 formation of higher bar, higher bar, lower bar. That's higher bar, higher bar, lower bar. Therefore, the swing low formation is like this one here. That is a lower bar, lower low, higher low. And that's how we're looking at a high and a swing low. So a swing high and swing low have now been defined. It means we have a swing low point here, a swing low point here, a swing high point here, a swing low point here. And we can see all the way through there, we have ourselves these lower high, lower low, but we need to have ourselves a higher swing low than the previous swing high, or a lower swing high than the previous swing low. Now, we're not going to find anything particularly through here because of the fact that we've simply got ourselves a sideways marketplace. If we deliberately go and focus on this period here now as the market's trending, we can see that we've got ourselves another swing low point here, another swing high point, 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 another swing high point over there. And we have the swing low points through here, swing low point, swing low point, swing low point, and swing low point. Now, I'm going to deliberately color code the swing lows in a different color, purely now because we need to see a certain setup occur. So we'll go through now and just change the colors of these swing high, these swing low points. So all swing lows are going to be shown in blue, and all of the swing highs are going to be shown in the red. That means we need to see the most recent blue above the most recent red in order for us to have a trade. So we're just finishing off now and looking at these final few. And we can see the last couple of swing lows there. Now, it's pretty obvious through this entire period the market's going fairly sideways. We have the highs roughly all at the same level, and the lows roughly all at the same level, apart from the couple up here. And there's only one case where we have a low higher than a high point. But we can see this marketplace overall is very much sideways market. Now, as we progress through from there, we can see that the next swing low point to occur is here, and this being a swing high point. Now let's look at this. We can see this swing low is higher than the previous swing high. So we have low, high, that continues all the way up to here, being the new one, and this being the low. Obviously this low can't be higher than this one here, it's impossible. But this low should be higher than the previous swing high. So we have ourselves phase 1, bit of a pullback, small phase 2, strong move up again, and the pullback. And we can see that this is actually pulled back to a position whereby we've got that higher low than the previous high. So that's our first condition. We need to actually have a higher swing low than the previous swing high. That's not the most recent, that's the previous, the one before the one that's just formed. That way we're confident we've got a strong trend. So there's no indicators involved here, we're purely looking at price action. We've seen we've got a higher low than the previous swing high. Now what we then need to see from the swing high point, and I'm going to zoom in there to look at the price action itself, we need to see from the absolute swing high point, obviously we don't know that's a swing high until this second seller candle here. So we need to see from the absolute high point one bar, or one candle in this case, where the high of the bar is lower than the previous high. So they've been getting higher and higher, it's pulled back to here. That means we've now got ourselves this high of this candle lower than the previous one. Now what that means is we've now had the pullback off the highs, and we're looking for the continuation with the trend. So bar by bar it would go like this. We can see the movement to the upside, it's still moving to the upside. At this point here, we don't know that this is going to be a high point. We expect it could be because of the change in sentiment, but we haven't seen the lower high of the candle on the next candle. It's at this candle here, this bearish pin bar, that we see the high formation, where we see we actually now have had one bar pull back from the high. And now that we're in this position, we can see that the lows around here are all obviously a lot higher than this previous high. So what we're looking for now is to find a bullish candle, because we're looking to go long. This is a swing long example. We're looking for a bullish candle. We zoom in a bit more detail here, look at the open and close. This one opened at 32, closed at 29. That was therefore a bearish candle, so we can do nothing. Now we have ourselves a bullish candle, which I'll mark with an arrow. So we've now had ourselves a bullish candle. And we can clearly see after that bullish candle closed, we had that swing low point that formed. So now we've got ourselves to this position where we've got this higher low than the previous high. One bar has pulled back, and we were waiting for the bullish bar. Now this one bar pulled back here, if this one had been a bullish bar, would have been interested. The fact was it wasn't a bullish bar, so we waited. We then saw the next one come along, which was the bullish candle. We've seen the buyer bar or the bullish candle. We're very interested there. Now we have this bullish candle, we have to see one more thing. The close of this bullish candle has to be in the upper 50% of the range of the most recent 3 candles. So I'm going to deliberately mark on the range of the last 3 candles. Candle 1, candle 2, and candle 3. And we can see the box there. Now in that box we can also see, of course, that the 50% level of this box measurement wise is around 165 pips. 160 of course, we look at about 82 pips or so It's fairly obvious that the 50% level is around here. It's also pretty obvious that this bullish candle has obviously closed in the upper 50% of the range of the last three candles. Now, it's this close in the upper 50% of the range of the last three bars that tells us the market is likely to move up. We're actually seeing that shift back into buying mode, first of all by having this bullish candle, and also we're seeing the close in the upper 50% telling us it's likely to move to the upside. And the reason why we actually like this position that we're in right now is the reason why we consider it to be a trend is because we've got a higher low than the previous high. So our entry point for this is on the close of the candle or the close of the bar. So it's the closing price that we enter on. Now, the swing system can be traded on hourly charts, 4-hourly charts, daily charts, and weekly charts, but it's primarily designed for the daily charts. Again, one trade per day is the potential per currency pair, and we can see that when this sets up, we can place the trade at the end of the trading day. Now we have the close there, which is the bullish close. This is our entry signal, where the arrow is, and it's a very simple setup from now on. The stop loss goes underneath the low of the bar, less the usual 0.1% of price, which in this case is about 10 or 11 pips. That makes our stop loss on this trade from the closing price 40, about a 50 pip stop loss here. There's a 50 pip stop loss on this trade, and the target is ATR 5, which is 97.8 or 98 pips. Then move on to the next candle. We can see from the closing price, which is our entry price, price has moved over 100 pips to the upside and actually hit target within the very next day. I'm going to draw some lines on here now showing the entry point and showing the stop loss and the target. First of all, we'll use the blue line for the entry on the close of that candle. The stop loss goes 0.1% of price underneath there, and the target was simply the ATR 5, about 98 pips. And that's gone and generated a return of just underneath, or just shy of a 2-to-1 reward to risk, which is a good swing trade. It's the reason being it is a small bar or small candle that we're able to enter on. The bar that actually gives the signal, the entry signal, is also the bar that gives us the stop loss as well. So whereas the continuation and reversal systems, it's the lowest low or the highest high of the last three bars, with the swing system, it's simply going to be underneath the entry bar. Now that we've seen this first signal, we'll keep going through now, and we'll actually mark on the swing highs and swing lows, sticking with this blue and red theme. As we progress through from here, we can see we've got ourselves another swing high and another swing high. We can also see we've got ourselves another swing low. Yes, we've got higher highs and higher lows. We need to have a higher low that's higher than the previous high. And it's looking like we could get to that point here. We've got ourselves this new high that's formed in price. We've had one bar pull back, this one here. We've got another one that's pulled back. Now notice we've had one bar pull back that's bullish, we do nothing. So bar 1, bar 2, we do nothing. This third one's pulled back and it's a bearish candle or a seller bar, we still do nothing because we're waiting for a bullish candle. And the reason why we're waiting for a buyer bar or a bullish candle is because it's very likely that we're going to get that above this previous swing high over here. There we have it. We've also created this higher low, which we can mark on here. So we've definitely got ourselves a higher low than the previous swing high. That's the first point, which confirms we're in a strong upward trend. The higher low than the previous high. And we've got this pullback from the highs. And we've waited now until we've got this bullish candle, which I'm going to mark with an arrow, which we can see here. And also we can see that the range of the most recent three candles here is 150 pips. Obviously the halfway point being 75. And we can see that this most recent candle has closed in the upper 50% of the range of the last three candles. That means that this candle here with the arrow is the actual entry candle. We've got our entry point on the close. The stop loss is going to go 10 or 11 pips underneath the low, around here. The entry point being the close, of course, not the highs or the lows. The entry is on the close. And the take profit on this trade is the ATR5, which in this example is 117 pips. 1.17 is 117 pips. Our stop loss is around 93 pips. So again, we have ourselves a positive reward to risk trade. We can see that once we got into the trade, it ran very aggressively in favor. And you'll typically find that 80% of swing trades that set up will hit target in around 2 days or 2 bars. We were looking for 117, which we hit very quickly the next day. We can see it went about 140, 150 pips. We made our quick 117. Thank you very much. Wait for the next setup. So we can see through this period so far, we can tick this first trade, which was a winner, and we can tick this next trade, which is a winner. The nice thing about the swing trade is there's no stop loss management, there's no target management. Once the trade has set up, there's nothing else for you to do other than enter it, and once you're in the trade, you leave it and you let it run. So we've got ourselves now to a point where we have ourselves a new swing high. And interestingly enough here, we have ourselves a new swing low underneath. And we've got ourselves a buy signal as well. If we look at this, we can see through here we've got a higher low than the previous high. We have ourselves a swing set up in this strong upward trend. The range of the last three candles is 290 pips. So we're looking for 145 pips being the halfway point around here. And obviously the most recent candle has closed above that level. Therefore, we have a buy signal on this bullish candle. We're buying on the close of the candle, which we'll mark here in the blue. Going to move these across very slightly. Our stop goes about 11 pips underneath to keep it safe. Our entry's on the closing price. And if we look at that now, we can now see that with ourselves that we got stopped out of that trade, and it was in fact a losing trade. So we have ourselves a losing trade there, which has stopped us out of the position for a minus 1%, which we can mark. Price is now moving to the upside again, and we can see through here we have ourselves this new swing high, another swing high, and we have ourselves a swing low and another swing low throughout this consolidation. We've got ourselves another swing high up here, and we can see price pulling back. We've actually generated a higher swing low than the previous swing high. Therefore, we've got ourselves a potential trade set up. First of all, we can see on this potential trade setup that with this higher low than the previous high, we've waited for one bar to pull back from the higher point. We've then proceeded to wait until we have a bullish candle or a bullish bar which is closing in the direction we're wanting to trade. Therefore, if we mark with the arrow now, we can see that this is our trade setup, and there's no need to even measure this one. We can see that this closing price is definitely in the upper 50% of the range of the past 3 bars. Bar 1, bar 2, bar 3. This close is definitely in the upper 50% of that range. Therefore, we enter on the close, entering on the close of this candle, and our stop loss is about 12 pips underneath the low of the candle. Of course, we've entered on the close, so there's no being triggered into the trade. We are in the trade. You can choose to use this swing system either with orders or with a live trade at market. But in the trade, there is no stop loss management. We can see with our stop loss being 12 pips underneath here, we're still happily in the trade. We can see 12 pips on here. If we just look at the low is 117.0, so 116.88 would be where our stop loss is, and the low of this was 117.04. We were, roughly speaking, about 16 pips higher up. Our stop loss was 5. So we're still in the trade. It's running against us, and this is a longer swing trade now, but it has now moved into a profit. And our take profit on this trade is 214 pips, and our stop loss is 315 pips. So it's an inverse reward to risk trade here. However, we've had some positive reward to risk winners previously. This is just one of the inverse reward to risk trades. Sure enough, we can see 214 pips we're after, and it's achieved it. So that's another winning trade there, which we can mark on, and we'll mark that with a check sign. So we're happy that's now 3 winners to the 1 loser. As we continue, we now find ourselves in a position where we have another potential swing trade. We have ourselves a higher high. We have ourselves obvious higher lows as we're progressing. If we just clean this up very slightly, we're happy with the higher highs and the higher lows. And what's interesting here is we've got ourselves a higher low than the previous high. So it's a higher swing low than the previous swing high. We have ourselves in a position whereby we can see the high point here. One bar has pulled back. We then have the bullish candle, or the bullish bar, which is closed to the upside, which I'll mark with the arrow now. This is our next trade, and the reason for this is because it's closed in the direction we're looking to trade, and more than that, we can obviously tell the close of this candle is in the upper 50% of the range of the last 3 candles. So measuring these 3, the range of these 3, about 250 pips, and this is closed 15 pips off the high. It's obvious that it's closed in the upper 50%. So this is our entry bar, or our entry candle, and our stop loss again is going to go about 12 pips underneath here now. So we'll mark the entry point, we'll mark the stop loss, and our take profit on this trade is going to be about 200 pips, 196 pips. So we'll squeeze that down, we'll mark on the 196 pips, just measure that now, we can see marked on 190, so slightly higher. Move it up. We've got ourselves the entry, the stop, and the target, and the stop loss here is around 140 pips, and we're looking to make around 200. So it's again a positive reward to risk trade. It's running in our favour because we entered on the close of this candle, There is no stop loss management, there is no target management, and within 2 candles we've hit target. We'll again mark this with a winning tick sign, another check sign. That's now 1, 2, 3, 4 winning trades, 1 losing trade. So we can see we're now looking at an 80% success rate, and of course we're now looking at waiting for the next potential trade. 80% success rate, and yes, it's a 1-to-1 reward to risk, but we can see this is a really good system for only trading trends for a start, because it's impossible for this system to trade a range. The reason why it's impossible for this system to trade a range is because we have to have a higher low than the previous high in order for us to have an upward trend, and similar conditions are true for downward trend, which we'll see shortly. Now that we've seen this upward trend and we've seen this 80% success rate system, and we understand on average it's going to achieve a 1-to-1 reward to risk, we understand that it's basically like flipping a coin. But rather than being 50-50, the coin's now weighted 80% in our favour. Remember that a swing high and a swing low is defined by a swing high being higher bar, higher bar, lower bar, and a swing low being defined by lower bar, lower bar, higher lower bar. That's how we're defining a swing high and a swing low. Therefore, there can be no discretion involved with this. It's purely mechanical. If it sets up, we take it. We've seen this upward trend examples now. We've seen the 80% success rate through there with the 4 winners and the 1 losing trade. And we're now going to have a look at Euro Aussie. And we're going to look at Euro Aussie because in a downward trend, we can focus on the downward trend examples now and look at what happens when the market moves down and the trade that we can take. We're going to start off to begin with looking at this sideways range, and then we're going to move into this downward trend so that we can be sure that there's no trade setups in this sideways market. We are of course going to make sure that we mark our swing lows with the blue, like so, and we'll mark our swing highs in the red, like so. So we see the swing high, we see another swing high, and we'll do all the swing highs first of all. Another swing high through here, another swing high here, another swing high, another swing high, and again. You can see as the market gets choppy, we get more swing highs and more swing lows that are just closer together. And that's probably enough for now. And we'll go through now and mark the swing lows on as well. Swing lows, of course, being in the blue. And we can see we're looking for that swing low formation, only marking those swing lows on the charts. Up here. Okay, so we're in the position now where we've marked these swing highs and swing lows, and when the market is moving sideways, you should very much have all the swing highs to the upside here, all the swing lows to the downside, and sure enough, there's no potential trades through there. Again, remember, we need to have a higher low than the previous high in order to have a trading opportunity. Or if we move across to the right hand side here, we can see a potential one if we zoom in and look in a bit more close detail. There may be a potential trade set up here. We're going to look at this high here, this high point, in relation to this low point. First of all, if I can hop my crosshair over the swing low point, we can see on the right hand side over here that this swing high is definitely lower than the previous swing low. So we have a potential trade set up in this area. We'll mark this swing low point here as well, of course, because we can see that. We've definitely got ourselves a lower high than the previous low. What that means for us now is we look at the price action setup. We see prices pull back from the low point here, pull back, and it's now actually closed in the direction that we're looking to trade, and that's on this particular candle here. Now we need to actually measure the range of the last three candles. So if we just hide away the more recent price action and just focusing now on these most recent three candles, we can see that the range is 180 pips. So this close needs to be in the bottom 90. As it happens, it's in the lower 80. Therefore, this is our entry point on the close of this bearish candle. So we enter on the closing price, which we're going to demonstrate now with this blue line. The stop loss is going to be above the higher point here, plus about 13 pips. And the reason for the 13 pips, if we look at the price at 1.28, we can see 12.8 pips. Obviously using the 0.1% of price, 12.8 is basically 13. So we've got ourselves a stop loss here of about 110 pips. 110 pip stop loss there, and our target in this particular case is 111 pips. So we're in a position where pretty much this is a one-to-one trade. Just mark on 110 pip target. Not quite. So we're happy we've got ourselves in a position of a one-to-one trade now. We're in the market, and we can see very quickly the very next bar hit the target. So straight away we can mark this as being a plus 1%, and it's a check sign, it's a winner. We know that on average these work out as one-to-one reward to risk, but we also are aware that the success rate is better than 50%, and that's how this system is making money, because the reward to risk is roughly one-to-one, but the success rate is around the 75% level. As we progress through here, we now find ourselves in a position where we have a potential trade set up. We're going to just delete some of these lines to clear things up a little bit. But the next swing low we have is indeed down here. And we have ourselves a swing high point. We have ourselves a lower swing high point and a lower swing high point. What's interesting here is this lower swing high point is lower than the previous swing low. We've had another swing high in the meantime, but no low there. These are exactly the same level. There is no swing low at this point. Now we've got this swing low point over these 4 bars or 4 candles here. A swing low and a swing high. Got a lower swing high than the previous swing low. We've got ourselves a potential trade set up. We can see that this one here being the low, this one has pulled back off of this position, and this one here has closed in the direction we're looking to trade. We'll just mark that on there with the arrow. And the range here of these 3 candles is 106 pips, but it needs to be 53 pips. We find it's at 55 pips, therefore this smaller bearish candle is indeed the entry signal. We enter on the close of the bar, target being 99 pips, which is just beyond where we are right now. We'll just scroll down a little bit further. We can see obviously this has made 100 pips of profit, and the stop loss on this trade was around about 65 pips or so, 65 pips, which means that we've got ourselves a 65 pip stop, got ourselves a 100 pip target, and we've made a positive reward to risk trade, which is a winner. Notice how accurate I was down to the nearest few pips with this 50% level, and that actually gave us the trade on this candle here. If we waited until this candle here, as it happens, we would have still comfortably made 100 pips. The fact that the trade system was, the signal system was generated on this candle here. So we've got that one marked on now as well. We're going to keep going through here, marking the swing lows and the swing highs. And we've got another swing high here now as well. And we're in interesting territory again, because from this swing high point, we can see once more, this swing high is lower than this previous swing low. You can see these lower highs and lower lows all the way down. And now that we're happy that we've got this lower swing high, we can also see we've got this pullback. So we're now waiting for a bearish candle to close in the lower 50%. Pretty obvious that this one here is going to do that. It fulfills that criteria. So we'll just mark it with an arrow. We can see that taking the range of these three candles, first of all, it's a bearish candle, which is what we were looking for. And secondly, it's closed absolutely in the lower 50% of these three candles. We enter on the closing price, and our stop loss is going to be around 100 pips, because it's 86, 87 pips, plus the extra 13 that goes on top. So it's around 100 pip stop there. And our target here is going to be about 71, so it's an inverse reward to risk trade. As we progress through, looking for those 71 pips, we find that within two candles, that target was hit. Thank you very much. Wait for the next trade. Interestingly enough, we have ourselves another swing high here, but unfortunately, whoops, a bit too far. Marking that swing high on here. As we progress further down, we see we also have a lower swing low. We have ourselves a lower swing high. And we find ourselves in that position again. We have a lower high than the previous low. This is an obvious one. This being the low. This being the pullback from the low. And we can tell that by looking at the closing price or the lower prices here, even just by hovering the cursor. We can see that this is a pullback from this low point. And we can see that this candle here has then closed in the direction we're looking to trade, which is to the downside. And it's obviously closed in the lower 50% of the range of these three candles. So we're in on the close. And the stop loss here is going to be around the 80, and a 90 pip level to be fair. 90 pip stop loss. And our target is 114. So this is a positive reward to risk trade. We were looking for profit-wise 114 pips. And we're in the trade still at this point. It's not actually hit target yet. So from the closing price, we're looking for 114 pips, and we've got it. It's gone down. We can see through here, we've obviously hit the 114 pip target with a 90 pip stop. It's another winning trade. So we can mark that on again. There's another couple here to mark on. Winning one there. And of course, we've got ourselves another winning trade here. We can see how in this trend we've got 1, 2, 3, 4 winning trades through here, and it's just keeping on going. We'll mark the next swing low. We'll mark the next swing high. We can see we've got ourselves another lower high here now. So we're waiting, and this is an interesting one. We've got that lower high than the previous low. We've got the one bar that's pulled back. Still pulling back here. And what's interesting is this is actually the high point. This is the low point. It's pulled back one bar or one candle. Now it's closed in the direction of the trend. If we look at the range of these three, it's about 150 pips. So the close of this candle, this most recent bearish pin bar, needs to be less than 75. As it stands, it's at 95, so there's no trade yet. We're waiting for a close that goes lower. This is a bullish close, we can't do anything here at all. And here's the bearish close. We can see this is a lower high than the previous low. It's closed in the direction we're looking to trade, and it's closed in the lower 50% of 1, 2, 3 candles. Therefore, our entry is on this one here. Our stop goes behind this bar, plus the 12 pips above it, which is the 0.1% of price. So we've got a stop loss of about 120 pips there. So 120 pip stop, and we're looking to make profit-wise 105. So it's slightly inverse reward to risk. We're looking for 105 pips. It's gone 100. And we can see through there now, definitely gone the 105 pips, and in a position where we've got ourselves another winning trade. That's actually now 1, 2, 3, 4, 5 for 5, all winners. And as we progress through here now, we're going to look at how it changes from downtrend through sideways, and we'll see what happens. Because we've definitely got the swing highs here. Another high here. Another high here. Another high here. We can see these highs here. We're all pretty close together. And the swing lows as they progress down. Again, as the market starts to go sideways through here, they're pretty flat. So we've broken the highs at this point. We've actually got higher highs and higher lows. But bearing in mind we're waiting for a higher low than this high here. We've got ourselves this high point, which we can mark on. So we can mark this high point here. We're happy that we've got ourselves a high point, and it seems like we've got that pullback as well. We can see this, the high of this candle is lower than the high of that candle. We can also tell now straight away this is in fact a swing low point. It's obviously higher than this previous high. And nicely here we can tell as well, it's closed in the direction we're looking to trade, which is now to the upside. Because we were in downtrend, it went sideways, gave us no trades, and now we've got the higher low than the previous high. We're not looking for shorts anymore, we're looking for longs. It's closed in the direction we're looking to trade, and it's closed in the upper 50% of these 3 candles. That's the buy signal. We're looking at a 78 plus the extra 12. So we've got ourselves a 90 pip stop loss there. And 90 pip stop loss, this is going to probably be quite a small target. We're looking for 83. It's around about a 1-to-1 reward to risk. It's gone sideways. And we were looking for 93 pips. 83 pips, sorry. Looking for the 83 pips. And it seems to have just about got there. There we go. We can tell it's definitely hit its target now of 83 pips. We can mark that on. And it took one from the entry point on the close of this candle, 1, 2, 3 bars or 3 candles to get the target. But that's again another winning trade. So you can see through here that this is just giving us winning trade after winning trade, both in the downward trend and in the upward trend. In fact, I can see another opportunity there again. It will take your eyes some time to get used to these setups. Bearing in mind we're being very accurate with our swing highs and our swing lows. We'll work through this one last example now, but the important thing is to make sure we have the exact swing highs and swing lows that we can see on the chart. It helps to mark them as well when you're first learning, just really because it will clear things up for you and really visually show you if you've got a higher low than the previous high, or a lower high than the previous low. You're going to want to take some time to obviously review this video a few times to make sure that you fully understand it. And we're going to go through this one again now just to make sure that you get the chance to look at one more setup. We can see this high here is from the high of the candle, high of the candle, high of the candle. It's got higher than lower, therefore making this a high point. We've actually got the one bar that's pulled back from the high point. We've then got the candle close in the direction that we're looking to trade, And I must point out now we don't know that this is going to be the swing low point. It looks very much like it is the swing low point, but it doesn't necessarily mean that it is at this point in time. However, the trade is valid because obviously out of these candles here from this swing high, the swing low can only really constitute these couple of candles, and they're obviously higher than this swing high. So we've definitely got a potential trade setting up. It's closed in the direction we're looking at the trade, and we can see just from looking at the range of these three candles, this is obviously closed in the upper 50% of the range of those three candles. I must stress how important that is. You can't just have the bullish candle or the bearish candle in the direction you're looking to trade. You need to have that close in the upper 50% to go long, or the lower 50% in order to go short, because that gives you a real shift in sentiment there. We've got the entry on this candle because it fulfills the criteria, and we can visually see here how the close of this candle is obviously in the upper 50% of the range. The stop loss is going to be about 115, 117 pips. This is about 117 pips stop loss. And the take profit, if we hover over the ATR5, is 113 pips. So we're looking at, roughly speaking, a 1-to-1 reward to risk trade. We've got in on the close of that candle, and we can see that over the weekend, so we've got the close there, not a lot has really happened here, it's just gone flat. And it started to pull back against us slightly here now, but we're in the trade. Still in the trade. Still in the trade. The longer one. And it looks as though that one there is probably taken us to our target point. Remember, we were looking for a target of ATR5. The ATR5 was 113 pips. And 113 pips there, we can see we hit target over on this bullish candle over here. Took 1, 2, 3, 4, 5 or 6 bars there to actually hit target. It's a longer swing trade than you ordinarily see. But again, it's another winning trade. We can mark that on with the check sign. We're actually now 7 winning trades out of 7. Now I'm telling you it's a 75–80% success rate. I've shown you through here it's had an exceptionally good run of winning trades. Of course, losing trades can and do occur on this system, as with any system, and unfortunately sometimes you're going to incur a few losses. The nice thing is, with such a high success rate, it really does help to build your confidence. I must point out that with the reversal and continuation strategies, those continuation and reversal divergence systems, they'll have bigger wins on those, obviously because of the fact you're trading a stop loss on some parts of the trades. But with the swing trade, you know that pretty much all the time it's going to come in around about a 1-to-1 reward to risk. And nice thing is as well, it's a pure trend-based system. It can't trade chop or range. It will only trade trend purely by the definition of higher low than previous high in an upward trend, or lower high than previous low in downward trend. It's really going to help you now if you spend some time looking through some charts and first of all just identify the setups. I don't want you using the trading simulator straight away on this one. You need to go through and just look at the charts and identify them looking backwards in time. Then go through bar at a time using F12 on your keyboard. That's function key 12 on your keyboard, just to help you go through bar at a time like I've been doing, identify the trade setups. Once you're comfortable with how that works, then use a trade simulator and go through and actually take the trades and do a couple of years in a few different currency pairs, again just to build your confidence in the system. And you'll see how it might go through a period on one currency pair where it may not trade for quite some period of time, and then it will go through a period of time when the markets are trending and it will trade quite a lot. Make sure you put the time in to do that, because it will really help you to identify those setups and build your confidence in the swing system.